Who can invest? Earlier it was, like I mentioned, just the domain of family offices and HNIs, but more and more we are seeing participation from retail investors, and we are trying to solve it for them. So we are raising a private equity fund. We have raised 350 crores till date, and I can tell you most of my investors are retail investors. They are not family offices, they are not UHNIs, there are people like you and me. People who are buying mutual funds are now upgrading and buying private equity funds. And this asset class, we are not saying that it will replace the public equity. We don't want to say that. Obviously, if a client has to put 100 rupees of capital to investments, we subscribe to the view that maybe 30-40% of his net worth should be in listed equity, because that is liquid, that is transparent, you get to see all the big companies, they go public, so that is something that will always be there, and we endorse that view. We also endorse the view that maybe another 30% of your net worth should be in maybe hard assets like property, maybe gold, maybe cars, whatever. But we are saying that there is a space for private equity in a client's portfolio. For a big investor, it could be 20%. For a normal retail investor, it could be 5%. So between 5 to 20% of somebody's net worth, and depending on the age group, should be in an asset class where you will derive alpha. Private equity fund management generates a higher alpha compared to public equity, and that is why for you to get that additional return, you need to have 5 to 20% of your net worth in this asset class. Yeah. So what are the challenges, right? The challenges, like I mentioned, key challenge of investing in private equity is illiquidity. It's not like if you buy a stock, you will be able to sell it tomorrow. Generally will not happen. Unless it's an NSE, most of the times when you buy an unlisted share, you will have to wait either for an IPO or some liquidity event which may or may not always be in your hands. So investing via funds gives you that option, because when we buying in through a fund, we will have the rights in terms of exit. We will determine the time of an IPO. We will determine who will be the IPO banker, whether it will be a Kotak or a JM or an Edelweiss or a Morgan Stanley or Motilal. We will determine who will be the IPO banker. We will determine what will be the IPO valuation. So there is a team of people. There will be people from the company side, there will be people from the investors, and there is a board level discussion. Any and every event which is important to the company is discussed at the board level, and liquidity event is one of the most important decisions for a company. So exit is to a large extent in our control in terms of the timing, the banker, the valuation, even the share price. So it helps us both while going in, because we can negotiate our entry valuation, and even while coming out. Most of the times public fund managers will just take the price whatever is available to them, but in private equity, when we decide on the exit, most of the time our IPO valuations will be at least 3x or 4x the price that we have paid on entry. Below that, generally we will not allow the IPO to happen itself. So that is the level of control which we can exercise on the company. In addition, like I mentioned, investing in private companies generally comes with the risk of information, lack of access. Today, if I were to ask you, how many of you know Zomato's numbers? Maybe half of you will say, okay, we know it's a, $15-20 billion company, they are doing $1 billion of revenue, etc., etc. If I were to ask you, what do you think of Swiggy? You will not know anything. You will not know the revenue. You will definitely not know the contribution margin. You will definitely not know the profit. But we know. We will, while we are going in, we will sit across with the company. We will understand what the numbers are, and accordingly we will solve the information asymmetry which is there in the market. So coming in through the funds enables the clients to have the lack, to fulfill that lack of information, to fulfill that lack of access. If you want to buy an unlisted share, you can buy through an unlisted broker, but just like a bilateral deal. Buying through a fund gives you all the rights, protection, information, and exitability.